following is an update and technical analysis on Triple Point Venture Growth, a company of the financial services sector in asset management, here off the Daily Interval, where I mentioned on the 5th of July, 2023, where trading spot price $12.11, and that I remained critical in that previous video that the primary reactionary uptrend line needed to be withheld by bull traders and or long traders aggressively, really at all costs, whereas short sellers, bear traders wanted to see a nice clean breakdown sell signal down to the final target at $10.50. Well, the bull traders, long traders, they ended up slightly breaking out above this primary channel, reactionary downtrend line here off the November 2022 highs. And each little pivot point in rally was just being sold into aggressively, struggling to maintain that bounce to the upside, whereas the technical momentum indicators just sort of waned out and put in confirmed negative and bearish divergences on a confirmed divergent high, just a peak above that primary reactionary high channel there. And then it was sold off into watch for a clean break below that primary reactionary high trend line in what you would call a complete momentum fueled overshoot right back into the primary downtrend line, and watch for a big breakdown below, offering in a nice clean risk reward short trade setup for a major crash, double digit crash to the downside. And here's the update. Nice clean bearish rising wedge pattern here, and the entire trade off that breakdown, selling right into 1050 price support, was good for a 15.56% crash, and really to the button there, especially if you're an active and or quick day trader. The entire trade up on the day in a single day netted you 6.5% in gains on a multi-day rally, puncturing retest back test to the primary 200-day and 50-day moving average. For a prolonged 2-day rally, was good for 12.2% in gains there. And talk about a beautiful day trade entry to the upside, completely gapped down here. And those are your key inflection points to really watch in, where it has just maintained a struggling consolidation phase amongst that 1132 price support there, especially, again, if you're a long-term investor and dollar cost averaging inflection points. These are your targets to hone in on and keep an eye on. Whereas I believe a potential revisit back to the what you would call 50-day moving average, 1177 price resistance, and the top of the primary trading range channel, again, would offer a risk reward ratio, a move to the downside, and a potential re-challenging of the 1050 price resistance for an 11.7% crash, and then ultimately down to what I would call the reactionary, back to the reactionary low, revisit of that challenging $9.40 for a 20% crash, and then ultimately potentially revisiting the bottom of that primary reactionary low downtrend line channel, the primary channel at the bottom of the channel there, for a 24% crash if and when we get there. Zooming out to the $9.40 price support level, if and when we get down there, it just lies a big air pocket down below, and you have to zoom out to the weekly, take away all the lines here, and this is your key inflection point to watch, where you have the $9.40 price support there. Honing on some of these key inflection points, cuts right through some of the COVID crash of 2020 there, and that is the last line of resistance that I see coinciding with that primary channel. If you're dollar cost averaging right back into it for a prolonged move to the upside, if we take that level out, coinciding with that, with the bottom of the primary channel, then lies no significant support down below, which could usher in just a strong wave of selling on a retest to some of these levels in the deep down into the abyss.